Hello guys, last week we had huge bank and Netflix earnings report, some news about the cruise line industry, also Disney closing their Hong Kong theme park again. Next week we'll see Tesla, Microsoft, Chipotle and way more companies reporting earnings. Please smash that like button and subscribe since it really helps my channel out. We had kind of a nice week on the market. The S&P 500 ended up 0.61%. It started with a little volatility but then ended up pretty stable. Same happened with the Dow Jones, but it ended up on the green by 1.70%. Lastly, the Nasdaq surprisingly had a bad week and ended down by 2.11%. Now, last week we had some good and bad news regarding the cruise line industry. Carnival, Royal Caribbean, and Norwegian went up between Tuesday and Wednesday because of a promising vaccine news. Royal Caribbean by 21.25%, Carnival Cruise Line by 16.22%, and Norwegian Cruise Line by 21.85%. Sadly, the very next day, the CDC decided to extend the no-sale order through September since we are seeing an increase with the illness cases. This order was due to expire on July 24th, then cruise companies voluntarily delayed resuming operations until September 15th, and now it's not voluntary since the CDC extended it through September. We all know that the pandemic has hit very hard the travel and the tourism industry, but the cruising industry has been the worst since they have been operating with no revenue at all since March. A lot of you may already know that I started investing in both Royal Caribbean and Carnival way before the pandemic hit the US. In my Carnival position, I am down 57.82%, and in my Royal Caribbean position, I'm actually on the green by 0.8%. I do have to say that I have faith in the cruise line industry in the long term. Obviously, 2020 and maybe half of 2021 will be very hard for the industry, and I'm willing to take the risk and wait since when I started investing on them, I knew this was going to be a long-term investment of 5 to 10 years. Obviously, it's very difficult to see a 57% loss in my portfolio, but if everything goes as planned, none of them will go bankrupt since according to their latest reports, they all have enough cash to sustain throughout the year. Hey guys, remember that if you would like to join my Discord group chat completely free, the link is down below in the description. Last week we were happily talking about Disney reopening their theme parks here in Florida. Now this week we found out that they are closing their theme parks in Hong Kong less than a month after reopening since they saw an increase in new cases in the city. People have been asking why they have been so inconsistent with their theme parks reopening since they have been able to open only in Shanghai and only 2 here in Florida, but the rest are completely closed. Well, as I said, in California, they are waiting for the government to release the new guidelines. And also it is important to know that Disney does not own a majority stake in Hong Kong Disneyland since they only own 47% while the government owns the other 53%. Meaning that maybe Disney is not the one that made the call about closing their theme park there. Disney also got affected by the no sailing order by the CDC, meaning that they won't have any revenue from their cruises and very minimum revenue from theme parks since not all of them are open, and the ones that are open are operating at a reduced capacity. I do want to know how they are doing with their Disney Plus and other streaming services, since in my opinion, that is the only segment that will be generating anything this year. Last week, I said that banks reporting earnings were going to give us a brief overview on how the economy has been doing. Bank of America reported earnings of 37 cents per share versus 27 cents per share expected, and $22.5 billion in revenue versus $22 billion expected. Still, that is a decrease of 17.5% in comparison with the same quarter last year. Also, they increased reserves for credit losses by $4 billion and lower interest rates by 11%. Then JP Morgan exceeded expectations as well since they reported earnings of $1.38 per share versus $1.04 earnings per share expected, and generated $33 billion in revenue compared with a $30.3 billion expected. They decided to also set aside $8.9 billion for expected loan losses. Then Citigroup. They reported huge earnings of 0.50 cents per share versus 0.28 cents per share, and a revenue of $19.77 billion versus $19.12 billion expected by analysts. They stated that even though credit costs weighed down their net income, their business performance was very strong during the second quarter. Lastly, Wells Fargo. They had a very bad quarter since they reported a net loss of $2.4 billion, worse than what was expected. Missed expectation as well in their revenue since they reported a revenue of $17.8 billion versus $18.4 billion expected. This was Wells Fargo's first quarter loss since the Great Recession, which is definitely no good at all, as they decided to set aside $8.4 billion in loan losses reserves. We have to take into consideration that Wells Fargo has been operating under regulations since their scandal in 2016, which has made it way harder for them to see constant growth year over year. Also, they were the only ones in the bank sector that decided to cut their dividends to 0.10 cents a share. I do have to say that as a Wells Fargo shareholder, obviously I did not like that at all, since their dividend played a very important part in my decision to invest in the bank. In my opinion, these earnings demonstrate that the economy is better than what it looks like, and that is because the Fed has been bailing it out, printing a lot of money. Banks could have easily been hammered with the increase in unemployment, but they didn't. Obviously, it is very difficult to know if the economy will continue its rebound during the second half of the year, since we are seeing an increase in cases and some states have had to shut down their businesses again. As Jamie Dimon said, in a normal recession, unemployment goes up, delinquencies go up, charges off goes up, home prices goes down. None of that is true here. Savings are up, incomes are up, home prices are up. I still believe that banks are at a very good price right now, and this is mainly because interest rates are low and that directly affects banks' profitability. As I said before, I expect a lot of volatility due to the uncertainty we are facing right now, and we would like to recommend you guys to diversify your portfolio by investing in companies with strong fundamentals like Amazon, JP Morgan, Google, Facebook, Microsoft, and so on. Now, Netflix reported earnings last week as well. They reported a huge increase in subscribers as most people stayed at home during quarantine last 3 months. They reported 10.09 million subs versus 8.29 million subs expected. They beat revenue expectations but missed earnings since they reported earnings of $1.59 per share versus $1.81 per share expected. Still, the stock dropped more than 7% after hours since they came out saying that they forecast 2.5 million new subscribers additions for the third quarter, while analysts were expecting 5.27 million. I do have to say that I like Netflix as a very long-term investment, since their exponential growth of around 20% on a yearly basis is impressive and still have a lot of room to grow and enter to new markets. Next week we have huge earnings coming up as well. We have IBM, Logitech, Coca-Cola, United Airlines, iRobot, Tesla, Microsoft, Chipotle, AT&T, Skyworks, Discover, and way more companies. On Wednesday, we have a very interesting day with Tesla, Microsoft, and Chipotle. Many of you may already know that Microsoft is one of my stock picks for July. I'm expecting them to have gigantic earnings this quarter. For Tesla, people are very bullish at the moment, and more after Elon Musk congratulated his employees for their performance in the quarter. I will be posting a video analyzing their earnings on Thursday and giving my opinion for you guys on their current valuation. I do expect them to have a very nice earnings since their Model Y have been a success and their growth with Model 3 continues its nice growth trend as well. Hope you really enjoyed the video. Please subscribe and smash that like button since it really helps the channel out. Stay safe, thank you, and see you next time.